What do you say after looking at the title? What will be our comparable accounting standard? AS 4, right? AS 4. Contingencies and events occurring after the balance sheet date. That's the title of our accounting standard. So our accounting standard deals also with contingencies. And then we say and events occurring after balance sheet date. Here they say after the reporting period. In essence, both are one and the same. We will not discuss the contingencies over here because these contingencies are taken care of by contingent liabilities, which we will do when we will cover Ind AS 37. So at that time we will deal with the contingencies. So right now we compare the two with respect to events occurring after the balance sheet date. Now this accounting standard 4 has been recently revised, and this recently revised accounting standard 4 and this Ind AS 10, they are parallel to each other. So because of which what has happened is now we don't have much differences between the two. So whether we are discussing accounting standard 4 or we are discussing Ind AS 10, the discussion will actually run parallel. We will not have much difference now. Just very recently it has been revised. And if you are aware, the most important revision which really affected our companies was proposed dividend. We will be discussing everything, but this was the main highlight when this particular accounting standard actually got revised. For years and years, we have been recognizing a provision for proposed dividend because our accounting standard 4 made it compulsory that you should provide for proposed dividend, while international accounting standard never demanded any provision for proposed dividend. But as I said, this difference is now history. Both of them are absolutely comparable. Right? So what we do is, in general, because it will be a general discussion common for both, let's discuss what will the effect of any event which is happening after the balance sheet period or after the end of the reporting period. Now, when we say after the reporting period, we mean any event which has happened after your balance sheet date but before approval of your financial statements by the board of directors or maybe any other competent authority. So that is the time lag that you are having. For example, my balance sheet is to be prepared on 31st March 18. After that, the finalization work will happen, the financial statements will be prepared, then my books will be audited, and finally my financial statements will be ready. And these financial statements will be ultimately signed, approved by the directors. So let us say that is something which is happening, let us say on 7th May 18. So this time lag that you are having from the end of the period till the approval, during this period, if any event is occurring, right, if there is any event occurring, what will be the effect of that event? That's the subject matter of the accounting standard. Clear with it? So when you say event after the reporting period doesn't mean for years and years, every event which is happening right now is always happening after some or the other reporting period. So you can always argue that something that happened right now, 31st March 17, if I pick up that date, after that reporting period. So there has to be an end, that till what time can we consider it. So this is the time lag that you have. How shall we give effect of this event? These events will be classified into two categories. One is known as adjusting event, another is known as non-adjusting event. What do we mean by that? If it is an adjusting event, I will change the figures of my financial statements. I will restate the figures. My P&L is getting affected, I will give effect in the P&L. If my balance sheet is getting affected, I'll give effect in the balance sheet. Both are getting affected, I'll give effect in both of them. This is when the event turns out to be adjusting. Another possibility is that the event is non-adjusting. If the event is non-adjusting, I will not disturb my financial statements. I'll leave my P&L and balance sheet as it is, right? But yes, if it is a material event, I will provide a disclosure for the same. That's it. So any event which is happening after the balance sheet date, but before the approval of the financial statements, please classify that event whether favorable or unfavorable, doesn't matter. You have to segregate that into adjusting or non-adjusting. Question is, when can I consider it to be adjusting? When can I consider it to be non-adjusting? So that's the main question. So what we should really ask ourselves is, the question that we should ask ourselves is the event after reporting period or balance sheet date, whatever you say, after reporting period, is providing information about circumstances prevailing on balance sheet date. Ask this simple question, that is it giving you more information about what were the conditions on the balance sheet date. So once you ask this question, either the answer will be yes or the answer will be no. There's no option of can't say, right? So either it is yes or it is no. If it is yes, it will be considered to be adjusting. And if your answer is no, we will consider this as non-adjusting. If it is non-adjusting, ask yourself, is it material? Yes, provide disclosure. If no, ignore. So it may be considered to be a routine transaction. You have to simply ignore that particular transaction. So this is the framework that you have to really apply, and you can decide whether you will give effect in your financial statements or shall you leave your financial statements undisturbed. Fine. And see, take this discussion also as a revision of Accounting Standard 4. That is also how you can do it. Because remember, whatever answer I will get as per Accounting Standard, same result I'll get even as per the Ind AS. I told you 3 categories of those questions, and one category of question is where AS and the Ind AS both are similar. So they may give you a question of AS4, only trick that they may play is, they will say that don't apply AS4. They will say apply Ind AS 10 and tell us what will be the answer. Your answer or your solution actually will remain the same. But what happens is, because you might not be aware about Ind AS 10, you are worried that how will I answer this? But the fact of the matter is that both are running absolutely parallel. So if you pick up your PM and you see questions of AS4, remember every question of AS4 will have same answer if you are applying Ind AS 10. Fine. Let's take some example and try to understand that how will it provide information about circumstances prevailing on the balance sheet date. I will pick up examples which are classical given in the accounting standards itself. Let's talk about insolvency of debtor. That's one of the classical examples to understand this particular segregation of the events. Let's say on 31st March 18, we are preparing our balance sheet. So on 31st March 18, I have prepared my balance sheet and I'm showing debtors, of course as a part of trade receivables. I'm showing debtors of, let's say, 5 lakhs of rupees. And in this there is some Mr. A from whom I have to recover 4 lakhs of rupees. So I have one major debtor and that amount is turning out to be 4 lakhs. This is 31st March 18. Let us say on 5th April 18, we get news. What's the news? Mr. A is insolvent. So this is the news that we are getting. A has declared himself to be insolvent. That just means that we will not be in a position to recover this 4 lakhs of rupees. Obviously, our books are still open. We have still not finalized our books. And that's the reason this will be considered to be event occurring after the reporting period or event after the balance sheet date. Question is it adjusting or non-adjusting? That is the question. Now, since Mr. A has declared himself to be insolvent, and now that we realize that we will not be able to recover this 4 lakhs of rupees, naturally you will now scrutinize this particular thing. You will really like to know that how come Mr. A has become bankrupt. So we just want to know what are the conditions which led to the insolvency of the debtor. As you scrutinize this particular event, you realize that Mr. A, right, Mr. A actually had a factory in Nepal, let's say. So this person has a factory in Nepal, and before the balance sheet date, let us say sometime in February, let's say. So let's say on 27th February, there was a major earthquake, let's say in Nepal. And because of this earthquake, the entire factory of Mr. A was destroyed. We are aware about this earthquake. We might have read this in newspaper. We might have seen this, in news channels. But we will not take care to find out that what must have really happened on account of that earthquake. But what happened is, one of our client had a factory in Nepal, and that factory got absolutely destroyed because of this earthquake. So Mr. A must have definitely tried his level best to recover the, loss, but ultimately he failed to do so. And finally on 5th April 18, he declared himself to be insolvent. Now, the question is this event of insolvency providing you information about circumstances which were prevailing on the balance sheet date? What were the circumstances which led to the insolvency of the debtor? What were the circumstances? The earthquake. When did that earthquake happen? Before the balance sheet date. So were the conditions leading to the insolvency present on the balance sheet date? Yes or no? We were not knowing it. See, we were not knowing. When we are preparing our balance sheets and when we are showing our debtors, we are not going to shoot letters to each and every debtor that, see, I am going to show this balance in my balance sheet. You are not becoming insolvent, right? This is not what we are going to do. We are going to argue the going concern principle. If our company is a going concern, every other client with whom we are doing business, them also we are going to consider as the going concern. So we are not going to ask this question. But now we realize that, see, this person became insolvent because of the earthquake which had happened before the balance sheet date. And that is the reason we will consider this to be, what do you say? We'll consider this to be adjusting event. So what will happen if it is an adjusting event? I will reduce my debtors by 4 lakhs. I'll now show my debtors as 1 lakh. And 4 lakhs will be debited to the P&L. I'll recognize this as a provision for bad and doubtful debts. Or I may just simply write off the debtors. That is what I can do. Everyone fine with it? Okay. Let's make a slight change over here. This news, let's say, is now on 5th June. Let's still assume that the books are open. We have still not approved the books. And this earthquake, it has happened on 27th April 18. So these are slight changes in the dates. So again you are getting news that your debtor has become insolvent. Again you will scrutinize the matter that how come the debtor has become insolvent. We now realize that this debtor had a factory in Nepal, and because of earthquake the entire factory has been destroyed. Now when did this earthquake happen? After the balance sheet date. So now tell me, the conditions which led to the insolvency of the debtor, were those conditions prevailing on the balance sheet date? Yes or no? No. So that means this is now an non-adjusting event, right? So it's a non-adjusting event now. And because it's a non-adjusting event, I will not disturb my P&L. I know I will not be able to recover 4 lakhs of rupees, but still I cannot open my P&L. I have to leave my financial statements as they are. Next question, is it material? 4 lakhs of rupees, you have to also see, say what are the figures in which you are reporting, and on the basis of that you may decide whether it is material or not. 4 lakhs of course is material. So tell me, should I provide a disclosure? So a disclosure will be provided by me. Everyone fine with it? So just ask this question, were the circumstances prevailing on balance sheet date? You know, many a times what happens is, or I would say most of the times when we prepare the balance sheet, there are certain assumptions which are made, and on the basis of those assumptions we prepare our financial statement. When I have sold on credit basis, I will make an assumption, and it's a very proper assumption that my debtors will make the payment on time, and that's the reason I'll be showing the debtors in my books. But the balance sheet conditions were such that that debtor was going through a financial crisis. We were not knowing about it, but once that person becomes insolvent, it is confirmed. And once it is confirmed, it becomes an adjusting event. When I change the dates, it becomes a new development. New developments are non-adjusting. You have to simply ignore them. Don't restate your financial statements. Let's take one more example. Let us say you are having some legal dispute. So you're having a dispute, let us say with one of your employees. Your employee has taken you to court, and your lawyers are advising you that, see, most probably we will lose this particular case. And then your lawyers are advising you that you should at least provide for damages of 1 lakh rupees. So what we do is we recognize a provision of 1 lakh rupees. So when I am preparing my balance sheet on 31st March 18, so when I prepare my balance sheet on 31st March 18, I am showing a provision for damages. And let's say our lawyers are advising you that, let's say 1 lakh of rupees, that you will have to pay 1 lakh. So I'm recognizing a provision of 1 lakh rupees. So that's on 31st March 18. Let us say on 8th April 18, the verdict of the court is out. And the court is suggesting you will have to pay damages of 1,20,000. So now, as per the court's directives, I'll have to pay 1,20,000. How much I have already provided? 1 lakh rupees. But now I'll have to pay 1,20,000. My books are still open. I have still not finalized the books. Ask yourself this question. Were the circumstances which led to the final judgment prevailing on the balance sheet date? Yes, you were knowing your employer has taken you to court, and you were knowing that 1 lakh you may have to pay, and you have already even provided for the same. And now it is getting confirmed. See, on balance sheet date, I was not very sure that how much I will have to pay. I was relying on the advice of my lawyers, and based on that I provided for 1 lakh. Now it is getting confirmed that how much I will have to pay. I'll have to pay 1,20,000. So this 20,000 rupees extra that you will have to pay, can I consider it to be adjusting? And if it is adjusting, I'll have to provide for another 20,000 rupees. So I will further debit my P&L by 20,000. Or it can even be the other way around also. The court judgment is that you have to pay only 80,000. Then whatever extra 20,000 you have provided, you can reverse it back. Remember, events occurring after balance sheet date are not just unfavorable. You know, many times we think in this way, only unfavorable things have to be done. Favorable things are also possible. And if favorable things are there, even that also need to be accounted for. For example, instead of the employee filing a case against you, you have filed a case against the employee. You feel that the employee has done a fraud and you have filed a case against that employee. And your lawyers are advising you that mostly you will win the case, and you will definitely get 1 lakh of rupees. Now, this will also attract Ind AS 37, where this item will become a contingent asset. So I cannot show it in my books. So I cannot show it. So this is what will happen. But as on 8th April, I win this particular case, and now it is confirmed that I will get 80,000 rupees. Can I now show it in my books? It has got confirmed, so I can show it in my books. So don't be of the view that only unfavorable, even favorable things can also happen, and even those favorable will be also incorporated in our books. Right? So as we can see here, the circumstances were prevailing, and hence it's an adjusting event. Let's take one more example. Let us say you are closing your books on 31st March 18. So you are preparing your balance sheet on 31st March 18, and you know what happens? Just 2 days after that, on 2nd April 18, a major fire breaks out. So there is a major fire breakout, and this fire, it is destroying your godown, let's say. So our godown has been destroyed on account of this fire. Of course, you are well insured, so insurance has been definitely obtained for. The loss is turning out to be, let us say, 10 lakhs of rupees, and your agent is suggesting that the insurance company may step in, but only to the extent of 8 lakhs. It's very rare, insurance company paying the full amount, right? So we are of the view that 10 lakhs has been destroyed, but 8 lakhs we are absolutely insured. So overall we are of the view that we'll suffer a loss of 2 lakhs of rupees. Question is it adjusting or non-adjusting? What do you say? This loss is caused by, yes, what you are saying is right. This loss is caused by fire, right? So ask yourself, were the circumstances which led to the fire prevailing on the balance sheet date? If you say yes, for example, if you say yes, that means you were knowing that 2 days after there will be a fire. So the next question will be, what did you do to stop it? Isn't it? Why couldn't you stop it? So we were not knowing that a fire will break out 2 days after the balance sheet date. In other words, this is again a new development. So it is non-adjusting. Non-adjusting, I will not disturb my financial statements. I'll leave them as they are. Isn't it? But yes, is it material? Yes, my readers should know that a fire has broken out. Actually, this news will be also out. Even people, there will be a lot of people who will also be knowing that in your company a fire has broken out. If they are your investors, if they are your debtors, creditors, they will also be interested in knowing that what exactly has been the problems caused because of this fire. So a proper disclosure should be provided. Fine. So we will consider this as turning out to be a non-adjusting event. On the line of this itself, even proposed dividend is now considered to be non-adjusting event. Proposed dividend is simply representing distribution of profits. So basically what happens is when I propose dividend, at that time there is no right on the part of the shareholders to demand that particular money. It's nothing but an undistributed profit. And if it is an undistributed profit, there is no possibility of showing it as a provision in our books. Yes, once the AGM has been called up, in the AGM the dividend has been ratified, the dividend now becomes a declared dividend, then there's a liability on the part of the company to pay it. So just because dividend is proposed, we are not supposed to recognize any provision for the same. Earlier in India, we were recognizing this provision. Our old accounting standard 4 considered it to be adjusting event. But after the revision of AS4, the principle of AS4 is at par with the international practice. And the international practice is consider proposed dividend as non-adjusting. Similarly, if you are doing any major mergers or acquisition, even these mergers and acquisitions are also considered to be non-adjusting. This is something really important. For example, let us say you are closing the books on 31st March 18, and on 1st April 18 itself, you take over another company. Now, many of us will argue that this will turn out to be adjusting, because if you look at the meaning which is there, 31st March 18, I close my books. On 1st April 18, I take over the other company. I'll ask myself, were the circumstances leading to the merger prevailing on balance sheet date? See, mergers don't happen without negotiations. It's not possible that today I close my books and tomorrow I come to your company and buy out your company. That can't happen. Negotiations must be going since a long period of time. So basically what happens is the circumstances which were there, which was ultimately leading to this particular merger, the negotiations which were there, they were definitely happening on the balance sheet date. Still this merger, still the acquisition, still demerger, any kind of reorganization that you are doing, all of them will be considered to be non-adjusting. You have to provide disclosures for the same. So disclosures will be provided, but as far as the accounting is considered, the accounting will be done only on the legal date of acquisition. Why is it so? Whether it is Accounting Standard 14 or whether it is IFRS 3 or our Ind AS 103, effect of mergers, acquisitions can be given only on the acquisition date. You cannot give effect before the acquisition date. So, if I have decided my acquisition date to be 1st April 18, effect can be given only on 1st April 18. Negotiations were happening even before 1st April 18, but I cannot argue this as an adjusting event and give the effect of the merger. So there are other Ind AS which are applicable. So this is basically a case of business combination, and the effect of business combination can be given only on acquisition date. What's the acquisition date? 1st April 18. So I will give effect of merger only on 1st April 18. Although negotiations, circumstances which led to the merger were prevailing on the balance sheet date. So you can consider this as an exception because the main Ind AS wants you to give effect on the acquisition date. And finally, the last thing over here. As you are saying here, a major fire has broken out and your godown has been destroyed. See, it should not happen that the fire which has broken out is so major that your entire industrial unit has been destroyed. The loss suffered by you is so huge that perhaps you will not be able to continue your business anymore. In such a situation, you are no longer a going concern. And if you are no longer a going concern, then this event is no longer non-adjusting. Now this event has become adjusting. And you will have to prepare your financial statements on liquidation basis. So that's the exception which will be there. So when you are talking about fire, right, the loss should be something that you can bear, right? So it should not be a major loss that now I will no longer do the business. Yeah, turn to page 42. 23. What is the date of approval for issue of the financial statements prepared for the reporting period from 1st April 2016 to March 31, 2017 in a situation where following dates are available? We are completing the preparation of financial statements on 20th May. Board reviews and approves it on 19th June. Shareholders get it on 1st July. AGM is on 15th September. And we file it with our regulatory authority on 16th October. Tell me, when can we say it's the date of approval? 19th June, everyone agrees? Right, so 19th June 2017. In other words, from 31st March 17 till 19th June 2017, if any event is occurring, then that's the subject matter of Ind AS 10. Yes, next they are saying, suggest treatment for following events after the reporting period. Assume in each situation that books are under process of finalization and hence not as yet approved by the board. Yes, they are saying, during the month of December 2017, the company undertook a project of laying a pipeline across the country, and during May 2018, the engineers realized that due to unexpected heavy rain, the total cost of the project will be inflated by 50 lakhs. Year ends on 31st March 18. What do you say? Your year has ended on 31st March 18, And the event has happened during May 2018. What's the event that has happened? There has been unexpected heavy rains, and because of which the cost of your project has increased. Tell me. Ask this question. What has happened? Which is the event which has happened? Unexpected heavy rains. So this unexpected heavy rains, is it providing you information about circumstances existing on the balance sheet date? On balance sheet date, we were not knowing that in May it is going to rain. In any case, in May, we are not expecting any kind of rain, isn't it? And they are themselves saying unexpected heavy rain. So it is non-adjusting. What do you say? Should a disclosure be provided? Disclosure should be provided. It has inflated by 50 lakhs. We can consider that to be material. So disclosure is required. Yes, the next one, B. And this is quite interesting. Let me see what you are saying. During the month of December 2017, the company undertook a major civil engineering contract, and during May 2018, the engineers realized that due to unexpected sand at the construction site, the total cost of the project will be inflated by 25%. Year ends on 31st March 18. It is same language, instead of unexpected heavy rains, now there is a discovery of unexpected sand. So tell me, adjusting, non-adjusting, or can't say? Adjusting, non-adjusting. Seems it's a divided house. Look at it. What have you discovered in May 2018? You are doing some construction. For construction, you must be digging that particular land. So initially, when you made estimate of the project, you must have suggested that, okay, the project will cost us, let us say 50 lakhs of rupees or whatever. At that time, you had not expected this sand. Now, as you started digging, now all of a sudden you have discovered sand. Question is, was that sand at that place on 31st March? Or it just traveled in between? It just came from somewhere. Okay, you are doing your contract over here. Fine, let me come and stay over here. What was it? Sand was always there. See, on 31st March, sand was there. You were not knowing about it. Now when you started digging that land, now you realize that, okay, sand is there. Some rocky surface is there. And because of which, your cost will increase. So tell me, what is it? It is adjusting. It's not like that rains, right, which just came from nowhere. That sand was always there. You were not knowing. Now you come to know as this event occurs. So adjusting. The Board of Directors at their meeting on 26 June 2018 has recommended a dividend of 15% to be paid to the shareholders after it is approved at the AGM. That's simple. You are recommending a dividend, non-adjusting. A company deals in petroleum products. The sale price of petrol is fixed by the government after the balance sheet date, but before the finalization of the company's accounts, the government unexpectedly increased the price retrospectively. Adjusting, non-adjusting. We will stress on that word, unexpectedly increased the price, right? So you are not expecting it. So that means the circumstances were not prevailing on the balance sheet date. But just think for a moment, let's say in the parliament session, when the budget is going to be discussed, at that time the government is also discussing that we are thinking of increasing the petrol price and all. That means on 31st March, you have some knowledge about it. Then this particular item will become an adjusting one, because now it is not unexpected. Now it is on expected lines. The way it is given, it will be non-adjusting. A company invested 100 lakhs in April 2018 in the acquisition of another company doing similar business, the negotiations of which had started from February 2018. Year ends on 31st March 18. It is non-adjusting, right? So it is a case of acquisition of another company. So you are going for a merger. Effect of merger can be given only on acquisition date. And what's the acquisition date? April 2018. So I will consider this to be non-adjusting. See, I do agree with the counter argument that you cannot all of a sudden go for merger. Negotiations definitely is happening on 31st March 18. Still, I cannot give the effect of the merger. The effect of merger will be given by the Ind AS which governs that merger. And that Ind AS is Ind AS 103. Or in our existing AS format, it is Accounting Standard 14. Both are clear. Effect can be given only on acquisition date. So I have to consider it as non-adjusting. But I will provide all disclosures. All disclosures will be given that if the merger had taken place, then this would be my assets, this would be my liabilities. So I will not give effect directly in the balance sheet, but the effect has to be disclosed because it is material. And if it is material, disclosures have to be given. A major fire has damaged the assets in the factory on April 2, 2 days after the closure of accounts. The loss is estimated at rupees 20 crores, out of which 12 crores would be recoverable from the insurers. Non-adjusting. But we know that the loss should not be so major that the principle of going concern is no longer applicable. So that point you should always write over here. X Limited sold its building to Mini Limited for rupees 60 lakhs on 30th September 17 and gave possession of the property to Mini Limited. However, documentation and legal formalities are pending, which were completed after 31st March 18. Due to this, the company has not recorded the sale and shown the amount received as advance. The book value of the building is rupees 25 lakhs as on 31st March 18. You have already sold the building, you have also given the possession, only documentation and certain legal formalities are pending. See, we have to always give importance to substance over form, right? So legally speaking, till the documentation does not happen, you cannot say that the sale has occurred. But whatever are the risk and rewards incident to ownership, that we have already transferred. For example, once you get the possession of that property, as a buyer, you will start using that property. You will start behaving as if you are the owner. So we can consider this as a sale transaction. We should consider this as an adjusting event. So we'll say it's an adjusting event. What you can always write over here is importance should be given to the commercial reality of the transaction. And the commercial reality is once we have sold that property and once we have also given the possession, you can consider the other party to be the owner. So you better remove this building from your books. Yes, and the rest of the questions, I'll draw your attention to question 27, 28, 31, which deals with proposed dividend, which we had discussed. And the most important one I'll say is 34. This question 34 is based on that cow out. Right, that Ind AS 1 cow out that we had discussed. At that time we were invoking Ind AS 10. For example, just before the balance sheet date, you have breached certain covenants of the loan, and the loan is becoming immediately repayable. So we consider it to be a current liability. But before I finalize my books, right, my books are still open. Before I finalize my books, I am in a position to remedify those breaches. And now my bank says, no problem, no need to make an immediate repayment. So try to understand, not just Ind AS 1 is involved over here. Ind AS 10 is also involved, because this remedying of the breach is happening after the reporting period. So I have to answer that question with reference to Ind AS 1 as well as with reference to Ind AS 10. So 34, it will take care of both of them. Even if you will glance at that answer, you will be able to see Ind AS 1 also there and Ind AS 10 also over there. So if they are asking any question based on a cow out, this is a highly probable question. Shall we stop here for today?